Hello, everyone. I'm Joe Welu. Thanks so much for tuning in to Expert Insights, where we talk with industry leaders across modern financial services to discuss leadership and innovation. Let's get started.
All right. Hey, everybody. Welcome to Total Expert Podcast. Just wanted to have a quick conversation with our Chief Lending Officer, Mr. Dan Catinella today. Big Cat, how you doing, buddy?
Good, man. Good. It's a good day. Happy day in mortgage.
It's been a good 24 hours, man. So I wanted to just spend a few minutes talking about, I know both of us, one of the best parts of our jobs is we get a chance to talk to a lot of the leaders across the industry. And I think the thing on everybody's minds right now, there's some obvious things, but how does what the Fed announced yesterday, they announced 3 rate cuts next year, multiple rate cuts the year after, the markets are dropping, rates are now firmly in the mid sixes or ish. How's it changed the conversation and what people are prioritizing for next year?
Yeah, so a couple of things. Obviously, there's some borrowers that now can come back into the market. So purchases that may have not been possible, they're able to re-engage those customers. But I would say the highest level of conversations we've had over the last 24 hours have been really around making sure that lenders are seizing the refinance opportunities of their last 15 to 18 months of business. We've been doing some models on a couple of our customers, and ultimately, like if rates do drop to the low sixes, a lot of our lenders are looking at about 60% of their previous 15 to 18 months production that now could be in the money.
And so walk me through one of the other things that we've been talking. So first of all, I think that's as a leader, modeling out what happens every 50 basis point adjustment, what happens to your portfolio, what happens to your past customers, also what happens to your prospect list, to where you had first-time home buyers or other buyers that just decided, this is just too much pain at 8%, 7.5%. So you need to run those models and say, what does that mean for net new business? You and the team have done a great job at partnering with some of our customers and prospects on walking through those models. But not only do you need to know how many refinances, but the other thing you've educated me on is the early payoff component and kind of the pain or the potential for that to get pretty expensive if you don't really know how to capture those borrowers. Walk us through that just a little bit.
Listen, it's a real thing, and we know the financial situation all of our lender partners are right now. And yes, it's fantastic to be quoting somebody in the sixes today, but when you have the market make a shift as quickly as it has, it also introduces a level of risk with early payoffs. So those transactions that now may be in the money, if they're not seized by these lenders and somebody else goes after those customers, for those last 6 months and sometimes more of customers that are in the money, if somebody else goes after them and does run off their books, those lenders could be hit with significant penalties, typically about 3% of the unpaid principal balance on those transactions. So with the opportunity, there's also a level of risk there to make sure that you're seizing that opportunity.
So as you're modeling your business for next fiscal year, a lot of the industry is on a January 1st fiscal year, December 31 end of their fiscal year, and you're modeling what you're going to do next year, your budgets and everything. Walking through those scenarios is probably an important part of your process today. And that conversation wasn't nearly as important a day and a half ago or, a little more than 24 hours ago, right? I mean, this really did change how you have to look at the business next year as it relates to kind of those refis as well as early payoffs.
Yeah, I think as we go into 2024, what we're going to start to see is the market more normalized. I mean, as you know, most of the retail players, mortgage players that we're talking to have throughout the year have primarily seen most of their business driven through purchases. Some lenders are seeing 90 to 95% of their business driven from purchases. So we're going to start to see that normalize, and there'll be some more refinance activity and more of a normal market for sure. But lenders are really focusing on making sure that they operationalize those refinance opportunities. Distributor retail LO is always going to focus on the referral partner and his purchase business as primary one. but he can't let these customers slip out the back door, get hit with all these EPOs. So it is a happy medium to make sure that your continuing to service your referral partners, continue to nurture that purchase business, but making sure that you're also seizing these refinances from the last 15 to 18 months specifically.
I think there was a large swath of our customer base, execs that we've been talking with, that were hopeful they had maybe till next summer to really get some of this operationalized, because I think historically, when the market moves like this, a lot of lenders are caught on their heels, right? They didn't necessarily have everything dialed in, the engine dialed in, to be able to make sure at an enterprise level, they had it operationalized to be able to make sure they kept those borrowers from going out the back door. And it's not just about that. It's also about like, hey, we've just experienced 18 months of pain, and why not set yourself up to get the benefit of things turning the other corner, and how do you maximize that upside? And I know you agree. And
yeah, 100%. And I think this turn couldn't have come at a better time, right? You got seasonality kicking in. We're going to be going through a pretty cold winter. Primary business has been driven from purchases. So this shift to generate some level of refinance activity is so much needed now and is welcomed. So, it just increases the urgency for lenders to really focus in on not only their purchase business, but also seizing this refinance activity to give their originators some more at-bats, which they need right now.
Yeah, so I'm going to give just a little plug for you personally and our team. Those of you that are listening, if you're interested, no obligation, having you and the team walk through a model and having you look at their portfolio and having you model out what kind of potential business there is sort of at different rate thresholds. This is something you guys are doing every day right now. And I assume you have capacity and bandwidth to have some strategic conversations.
We love those conversations.
Yeah.
Absolutely welcome them.
And at a minimum, we're just helping educate the industry, other lenders, whether they're customers or not, educate the industry on what the impact, or better yet, what the potential upside can be as this market continues to move on us, hopefully in the right direction. And maybe our early Christmas present is kind of what it feels like this year after the year we've had.
We'll take some early Christmas presents this year.
All right, buddy. All right. Good chat, Cat, and keep us posted, buddy.
All right, Joe. Thank you.
Thanks so much for joining us today. Be sure to subscribe wherever you get your podcasts.